Bankers are feeling bashed right now. First, they had to deal with the financial crisis. Then they had to deal with the huge wave of re-regulation. Our latest report, called Banking Disrupted, looks at the next structural threat to the banking industry. And we've identified the threat that technology will pose on the integrated retail banking model.
Technology is attacking banks on a number of fronts. Take aggregators. The internet makes it so much easier for people to shop around, and that forces banks to compete on price because they are trying to get to the top of those price comparison tables. This is particularly acute for products like mortgages and lump sum savings. And if banks are competing on price, that is reducing their revenue and compressing their margins. Second, there are all of these new entrants, so-called challenger banks. You can set up a bank in the UK for as little as £10 million, and then the ongoing running costs can be as little as £5 million. Now that admittedly is for a small bank, and if you have more customers, you'll end up paying more in licensing fees for the technology. But the point is that to set it up is very cheap. We already see established entrants like PayPal, new entrants like Square in the US. And what the risk there is for banks is that these new players will come in and take a lot of business and take a lot of transactional data away from banks. We're seeing some completely new business models. Take peer-to-peer lending. These are exchanges that match business borrowers with savers. And they cut out completely banks from their traditional role as middlemen between those with excess savings and those who need to borrow. All of this sounds really scary for banks. So what should they do? Well, they should make hay while the sun shines. Interest rates are at historic lows across Europe, and so banks should exploit this super cheap funding from central banks to make money. They shouldn't just sit on that, they should invest it in areas where they can defend their competitive position. For example, in lending to small and medium-sized enterprises and bank assurance.
Banks' revenue base will inevitably shrink. In our view, they can't sustain their cost base at the current levels. So one of the items they'll have to deal with is their legacy systems.
They need to forget the assumption that bank IT should be bespoke, and they need to look more and more at outsourcing their IT provision and at buying systems off the shelf. It's a challenging time for banks in Europe, but an exciting time too.